Good morning, everyone. Today's Wednesday. It is April the 17th, and this is the futures in 5. Taking a look at the ES, we've got price action stalled, but still moving upside. So, what is our philosophy again? It is pullbacks or buy zones. And so, if you've been patient, you've been looking at this and you've been doing very, very nicely. What are the things to be concerned about? One, technical divergence. That's the number one reason I say, listen, don't buy that breakout. Wait for the pullback. Look definitively at where old resistance was new support, and then you can head yourself back up to the north. We've got motion here until really 29.29, 29.30. That's potentially there. There is a grind up. You might say, hey, how do I not get caught in a big wick down if I'm looking for old resistance as new support? What if I think it's here and I take the trade? You're going to have to look back and go, wait a second. I have technical divergence that gives me this possibility. And so if this happens, you wait for it to resolve and you get right back in. That's just how the game works. No place for you not to have trades that go against you. It is what it is, right? So roll with it. What do we do here? We've got technical divergence up at the highs again. We are pressing forward. A lot of good news. You know, China seems to have put all of these things on overdrive. Interestingly, what they've done to create easier environments for building and that sort of thing is that they've curbed back all of their um, warnings about polluting the environment, creating iron ore, and that sort of thing. They're like, let's put that to the side. What we really need to see is some growth. And so they really, it's very interesting how they're pulling the levers right there just to really push things out and save themselves from the global slowdown that they see. And they're trying to turn more of their people into consumers. Very, very interesting going on right there. We still have a forced measure, an incredible amount of leverage debt, and a lot of people stepping into places that are unique for them. All right, so we want to be very careful, not buy the highs. We can see every time we buy the highs, they pull back and that opens the risk. So wait for it. Old resistance, new support, that gives you 29.14 to 29.16, perhaps, as your stop. You want to wait for that. You think it's going to explode. That's your decision. My thought is still as the big spikes up or the big spikes down, those are great entries. Long on the big spikes down, short on the big spikes up. NQ bucking the trend. Take a look at this. This thing is a beast. This is a region I actually have as relative resistance. 77.1950 is a pretty big resistance zone. The next one after that is 77.40, 77.34. If we want to measure a wave, we can measure something really big as this wave right here. Let's do that. Let's break out the old Fibonacci, and we are going to see what our motion looks like. We can see 1618 at 77.10 and all the way up here at 178.60. Let's make this 170.70, which is a pretty important number. And you'll see my 34 level sitting right there. We'll see. These guys certainly are expanding quite a bit. They're expanding because tech has exploded. Apple resolved the business with Qualcomm. Qualcomm has another suit against Huawei. Chip stocks are going to explode. So what we want to look at is how's that going to affect us here, and for how long is this new cycle event going to propel us further to the north? And this is running on a new cycle event. Big motion up. Take a look at this. Still divergent, but in trending territory and with slope. We had our last motion to the upside several days back. It tells us when we see these arrows in the space, it says, hey, you better look for frontline support because that's going to give you the run to the upside. That looks terrific. Of course, you can see that the YM looks nothing like that. That's still got the resistance zone. It's going to get propelled to the north, absolutely, but that edge is going to be a bit more difficult to break through. Notice we're in the neutral zone, as it were, or slightly bullish to neutral, and so that tells us big moves upward are going to pull back first. Look for old resistance to become new support. That was this morning. And so this area down here will be our stop if we're looking for long action. So, that's 35-40 ticks away, and we probably only have 35-40 ticks to the north side. So that 1-to-1 might give us a good move. Okay, so news saying that API is, what's running this, but that's not API at all. Aramco is making this full bore assault to acquire across the board from all different countries all over the place. And my thought is that the perception might be that they could have a bigger stranglehold on things if they continue to acquire in the way that they are acquiring. So I find this to be extremely interesting. Now, let's just look at the technical events. Technically, all we're seeing is old support, new high, test of old support, holding the new high. Now, I thought this support would come down here. It's higher, but we're still range bound. We came right back up to this old zone. Guess what? It's another sell. However, what we've done is give us this arrow up here that says, hey, any pullbacks into higher lows, 63.94, 63.63, we're going to bump into some buyers. Probably going to give us a higher low. At that point, we could try to touch this 65.14, 65.12 area that's showing up as resistance. These guys, yesterday I thought, all right, they're going to go well. I listened to Hedge Eye, and they said some guy dumped a billion. I'm saying guy, human. I don't know if it's a guy or gal. I don't really care. Someone dumped $1 billion into the market yesterday in terms of holdings, and that threw gold right down into this support. Now, it is my supposition that gold is very likely to hold this region. The problem is, I expected it to move off this level with much more strength. So yesterday I was long here and unfortunately could not get up and over my edges. And so that is causing me some consternation. Would I want to go long here again? Yes, but, right? First time I go long with good size, next time I go long here, it won't be, because if I lose this level, it's going to be a short. So I've got to be prepared for the breakdown of this action. So what I'm really looking for this time is somewhere around 1274.40. The problem is I still have so much negative pressure that it concerns me, right? Old resistance, new support, thinking they're going to hold, but I don't know if it's a fly on the wall, whatever. We'll see what goes on there. All right. That's it. Still looking for these edges to hold, but when you're trying to pick a bottom, you've got to move in and out very quickly instead of holding until you break down into your stop. That's just not how this game is particularly played, right? You scalp the edges on the hold until you see it stabilize, and then you're able to continue. It's sort of like this, right? You get it here, you punch up, you get out. If it doesn't move forward, you wait for it to settle in. You get in, it doesn't hold, you get out, and so on and so forth until it gives you the ride up. And right now, everything is still saying, listen, I come into 1281, I'm seeing nothing but sellers. All right, take care, everybody. Good luck trading.